Hello everyone, Theunis here from South Africa. Nice and hot here in the Western Cape. Like always, I just want to check if you guys can hear me. I see there's a few people in attendance. Moses, Isan, Neville, Sunday, Tian. If anybody can just confirm that you can hear me and see me. I would appreciate that. Thanks. Can you guys hear me? Can you see me? Let me just check my audio. My audio looks fine. Isan says plus. What does that mean? Is it, can you hear me? Can you see me? I agree. I think that's yes. Okay. That's a shortcut for yes, I think. Right. Let me just hear somebody else. Can you guys hear me? Can you see me? I always start a minute or two before, so I've got time to sort out this. Ah, yes. Excellent. This one is the only guy that can see me or hear me. Anybody else? Neville, Moses, Sunday? 2 Sundays. Wow. Amazing. Tian, can you guys hear me, see me? Tanda, yes. Okay, excellent stuff. I've got 2 confirmations, so I'm ready to go. Right. We're going to talk today about Forex basics using orders. This is in response to questions I have from people that begin, they're not sure how to use different orders, they're not sure how to implement it, they don't really find anything that uses, that teaches them that step by step. So what I want to try and do today is to show you the different orders in a clear, simple way, and then help you to use them. Right. So to show you where we possibly use them, I'm going to discuss. I'm going to show you on the charts. We're going to simulate a few scenarios with different types of methods where we'd use immediate orders, where we would use limit orders, stop orders, and so on. So I want you guys to be able to review this. This has been recorded. So if ever if you want to listen to this again, you can just email me. My email is at the, well, see, I'll give you my email later. That's at the questions and answers part. So so that you can review it, because a very important part of the learning process is reviewing and repeating. Anytime you're learning something new, it's going to take time. That's how our brains are designed. The mother of but repetition is the mother of learning. You don't understand something, you read it, you ask questions, you get the answers, you discuss it, you understand more, but you're not sure yet. Some aspect eludes you. You ask another question, and every time you do, in your brain, there's neurons and dendrites building. That's memory, short-term memory first, and as you repeat, it becomes long-term memory. Memory muscle, muscle memory. So let's continue here. Always, I'd like to just quickly run through this. The reason why is I get beginners that tell me that they want to learn about orders, and then tell them, okay, that's fine, but why are you gonna where are you gonna enter? Why are you gonna enter? With how much you're gonna enter? And then they look at me with sort of like a blank, expression on their face. They say, oh, what do I mean? Right, now, if you want if you want to start entering orders in the market, please be sure to start practicing on a demo. So if you make mistakes, it doesn't cost you anything, and make sure that you know why you're going to enter at different places. Right, and with this, I simply mean it's on the recorded videos. When you log on to myfxt.com, I talk about the foundation of online trading. This is something we want to build on. This is a business, and we want to build something. We want to make a net profit over a series of trades. Now, with anything you build, you need a foundation. The foundation of the online trading business is threefold. We need a simple, well-defined method, not too complex, or else you get confused and analysis paralysis and decision-making fatigue. Especially in the beginning, you need a simple, well-defined method so you can practice. So, and together with that method, you need money management or risk management. How much are you going to risk of your account? Where are you going to take your profits? How are you going to manage that trade? That is the first part, the first two pillars. And then the last pillar is the most important one. You've got to practice that. So what do I mean with practice? When you learn something new, it's like a puzzle that you're building, right? You haven't got, you see perhaps the picture, you've seen the picture, but now you want to develop the skill. You want to learn about online trading. But in the beginning, you don't know all the terminology, you don't know how it works, you don't know what we use, what is the skill that's needed, technical analysis, you don't know why, and that stuff. So every time you learn, every time you find a new piece of information, it's going to be like a puzzle. So you know what you're going to do, you've got the framework, you want to learn about online trading, but you need some more information, right? So let's use this as an example, and I'm going to go to our website. And I want to show you a very important resource if you're still in this phase. So if you're looking here and you said, no, I want to learn how to place orders, but I don't know where I'm going to enter. I don't know why I'm going to enter. I don't know how much I'm going to risk when I enter. Then I want you to spend some time, firstly, with the short Forex videos. There is going to be some of your answers. A little bit down, you'll see there's nice answers. There's nice discussions about what is technical analysis. What is, in the beginning it says here, what is Forex? What is a pip? All these things related to the orders we're going to discuss as revision from other perspective as well. What is a buy and a sell order? What does it mean to go short? That's the immediate and the market order that we're going to discuss now. What is the buy and the sell order? When you click on that, you can watch a video and you can see the discussion there. It's all part of learning and repeating. So I'm going to show you now. I'm going to demonstrate it to you, and there's another way. So you repeat it, you get another angle on it, and you learn. Right. So I'm not going to stand here too long. Another thing I wanted to look at is the glossary. All right. What is the terminology? A lot of people hear different terms, but they don't know what it means. What we've done here, what the head of our education has done, is he's made a extensive, and I think this is one of a kind, guys, glossary, so you could look what is the proper definition of something. For instance, let's go to what is the orders, a trading order. What is a trading order? There's a click on that and it gives you a summary of all the popular trading orders. Right, now what we're going to discuss here is the instant execution, the market order, the buy stop, the sell stop, the buy limit, and the sell limit. This too is only in MetaTrader 5. It's not that difficult, but I'm going to skip that. That's a little bit more advanced. So I'm going to explain these ones, and in actual fact, when you explain these ones, then you can then you'll know what that means as well. There's an actual fact two videos about it. But I don't want to clutter you. I don't want to give you unnecessary information. So we're going to look at the basic ones that's used most often in all the strategies that you will, or most of the strategies you will use. Right, so there's different things. Go and look at different definitions here. You want to see what is a, for instance, what is a limit order. Go and see if you can see something here. Is there a limit order here? A limit price, limit order. Yes, click on it. See a very simple definition. That's all part of learning. In the beginning, your most important job is not to try and make money, is to get the skill, is to master the skills, to get to know this, to build that puzzle one piece by one piece. Still, until there's enough puzzle pieces that you can start making sense of it, right? And those three pillars that I talked about, that foundation, that is the things that's gonna cause you, gonna help you to make a net profit over a series of trades. It doesn't help. You jump around and you don't have a proper foundation. If you don't have a simple, well-defined method, if you don't know what money management is, how to manage that, and if you haven't practiced it properly, then there's no way, except if you're extraordinarily gifted, that you're actually going to make a net profit over a series of trades. Right, and the last thing before we start with the orders is that once you figured out the basics, right? What is the basics? You don't know. If you don't know, contact me. Go and look at that recorded webinar about the foundation. Get more insight. As soon as you click what the foundation is, I call that the aha moment. Before that, you can just mess around. You can spend years going up and down, testing hundreds of different methods. If that foundation is not in place, then it won't work. If the foundation is in place, if you get the basics and you start practicing them, you try, learn, and grow, then you rinse and repeat. You build muscle memory, guys. Then you will master it over time. Is it going to be instant or very, very quick? No, depends on you. Depends on how much time you've got available to study, to read through these things, to get clarity, to ask questions, to get the answers. That's why I've got these Skype sessions. That's why if you've got trainers, if you've got a mentor, it can help you instead of getting lost. You can have someone that just brings you back to the standard again, brings you back to the road, so that you can make progress. What you want to do is you want to go from point A, point B. You know nothing, or you're stuck, or whatever. You want to get to a point where you can make a net profit over a series of trades. Your foundation is fine, and then you build from there. All right, and then in the end, mastery. That's when you can actually start doing it. Different levels, depends on your passion and your time and so on. Now, this is a very important thing before we start. Shortcuts. There's no way, guys, that you can take shortcuts in this. You can't shortcut your brain. If you know the basics, I'm going to use an example, very practical. If you go and you bench press or you lift weights, and you go for the first time, you are not going to be able to lift all these weights, right? Let's say you can lift one of these bars, one on each side. So that's what you, without hurting your muscles, without hurting yourself, that's what you can pick up. So what is the procedure? And it's the mastery procedure. It's try, learn, and grow. In another sense, you're gonna, with the weights, you're gonna pick up those weights, pick it up, bench press, whatever. And as you do it, your muscle starts growing. You do it for a week or 2 weeks or whatever, and you can feel your muscles are growing. And then you add some more weight. Then you add the second one. All right. In the trading senses, we start with old charts. We figure out what is the basics. We practice that. Actually, we start on paper. What is the basics? Then we practice on the old charts. Then we practice on the demo. Get those things in place. That's all adding some weight. And then at some stage, when you have proven to yourself that you can do it on demo, then you open your account, you go from a demo to a sense account, you add some more weight, right? And then you progress from there. And it's for everything. The orders are after you figured out what your basics is, then you start practicing the orders on the demo. I just want to say that very clearly, because I get guys that open a sense account and they start just opening orders, but they don't even know how to set a profit, take profit, or a stop loss and stuff, and they forget they've got the open trades. When they open again, their whole account is wiped. Now, a sense account, luckily, you can start with $10, but still for some people that's a lot of money. So, or $100 or whatever you started, you don't want to lose it. So it hurts you. Now, as you practice, your muscles get stronger. Then you slowly get to this point where you can lift this. Let's say this is a live account. What happens with most people, or some people, with regard to this, is they're on the second bar, and then they feel, man, one day I can do this, and they add 2 bars instead of just one at a time and practicing. They add 2 bars immediately. What happens is they try to lift it, they get hurt, their muscles isn't prepared yet, isn't strong enough yet, they get hurt, and then they have to rest. They have to go and recover. It's painful and all that stuff. So writing off accounts is painful. I don't want you to do it, right? By all means, open a live account, yes, because this is a business. We are practicing. We want to get there. This is not a hobby or entertainment thing. We want to get to the point where we make a net profit over a series of trades, but give yourself some time to build your muscles first. All right. We've already looked at the different definitions. I want you to go and look at this after we're done. Go and listen to that. What does that guy say? What is what is the orders? What is a limit order, stop order? Go and repeat it, and then you're gonna. It's part of the learning process. It's gonna get stuck in your brain. Get stuck or whatever. It's gonna move as you repeat. It's gonna move from your short-term to your long-term memory, and that's the puzzle pieces you build. Right. Enough time for introduction. Let's jump over to the order types. Right, I'm going to make it practical. So when we want to open a new order, we go to I'm going to use the easy step-by-step method. We go to new orders and we click on new orders. Now when it opens, it's going to give you an option there. I think I'm going to do it anyway on the MetaTrader now. Right, that's what I just said. We click on new order. What it gives you is a couple of things. The most important part for me now is there is an instant order here and there's pending orders. Right, now very important, that can be an instant order, like you say that means it's a standard account or a cents account, but it can also be a market order, right? That's what it means if it's or that's when it's an ECN account, ECN 0 or ECN account or a pro account, right? So it's two different terms. So what does the two mean? It's got to do with the liquidity providers that we use. An instant order means that the instant when you press enter to buy or to sell, that it immediately goes into the market, right? So and if it does not, you specify the price here. So if it cannot give you that immediate price, then it'll give you a requote. Let's say you're trading and it's in the middle of news, there's lots of movement. You have a standard account, instant execution, like the one I have here. Let's jump here, instant execution. If I press sell, clack, immediately there's a sell. If this was in the middle of a news where there was a lot of movement, then it would have, I'm just going to close it here, then it would have immediately, if the price moves from where I wanted to go in, and it couldn't give me the precise price I wanted, it would ask me for a requote. So it would stall, it wouldn't open, it would ask me for a requote, and then I can decide, do I still want to enter or not? This is very, very important, right? A big difference, because you're going to get executed at the price you want, or it's going to ask you again. All right. Now, if this was a ECN account, that means this is the market order, then it would work differently, right? It's other liquidity providers involved. So if this was market execution and I pressed sell, then it would execute it at the nearest market price. So not the price I specified, but at the nearest market price. That means there might be some slippage. I might get, if it's a fast moving market, I might get a lower or higher in the market than I actually wanted to. So the advantage with instant executions here is you get requotes, so you get a choice. So and you're not instantly entered if the price differs, but with a market order you in, and it might be a different price that you specified if the market is moving fast. So both of them have got advantages and disadvantages depending on the method that you use, right? So that's what that is, and I'm going to explain now where we use that. I'm just going to go over what they mean. All right, the next one. So this is a market execution. Market order or instant execution, and as you can see, you are in the market, right? You're not waiting to get into the market. You want to enter at that stage because that is where your method will show you, or that's what your method said, right? So let's jump to the pending orders. When you look at the different one, there was the market or the immediate order. If you drop down to the lower one, I'll show you now, then there's pending orders. And there's 4 types of pending orders, right? So that's the ones that's located there. Let's go and look at the live ones here. So if I say pending order, then I can choose between 4 different: a buy limit, a sell limit, a buy stop, and a sell stop, right? Now, a lot of guys get confused here. In the beginning, when you're still figuring out what the basics are, you're not going to worry about this. This is going to come into play depending on the method you use, and then it's going to become important. And then it's also what you must realize is by practicing on a demo, you're not putting a lot of pressure on yourself. So you're going to find out step by step what they do. So, and that's important. Don't put unnecessary pressure on you. Don't put too many weights on you so you get that. Right. So let's go step by step to what is these things. What is a limit order? What is a stop order? Right. There's the options. Right, so let's get to a buy stop order. A buy stop order means that you want to open a buy position. You want to go long. So you're expecting the market to go up. So what does a stop mean versus the limit? Right, the stop means that I place this thing above the market price because I'm expecting the market to move in. Now a lot of guys, what I call, if you say this, they understand it, but especially on other people are more visually inclined. That's how I'm inclined. I like to see stuff. I like to picture it. I'm going to explain it to you this way. Right. You've got an uptrend here, higher tops, higher bottoms, higher tops, higher bottoms. Right. If you don't agree, if you don't know what that means, it's very important to go and watch the foundation recorded webinar. Right, so the market's been moving up here. This is an uptrend, and now the market is going down. It moves in waves. We know this. At some stage, the market turns and it starts moving up, and then the strategy I'm demonstrating here says that if it moves past that point, only if it moves past that point, I want it to become a buy order. I want it to become a buy. I want to enter long, right? So what do? Do I have to wait there in front of the screen? No, very handy. You can use a buy stop order. The buy stop order means you say when the market gets there, if I'm in front of my computer or not, you can leave it open. It's on the, when you open that order, it's on the server. So even if you close your computer down, then that stays there. That's especially valuable in the higher time frames when you trade. Right. So I only want to enter there. I want it to become a immediate or a market order when the price gets there. So what happens is nothing will happen. That order waits there. It waits, and the moment it crosses, it becomes a buy market order, and an open orders open for you. What's nice is you can with that buy stop order that you specify there, you can also put your stop loss and your take profits along. So it's a very handy tool. I use that a lot in the 4 hours, and let's say the previous night I see a setup, and I put my orders in. The next morning I come and I check, and then I see it's been engaged, and I've already got some of my take profits. So it's a handy way of managing a trade. Or the opposite side is it was engaged, the market structure changed, and my stop loss was engaged, and my account was protected. Right. It's not nice when you do not use stop orders to get up the next morning or after a while and you see your account is gone. That is not what we want to do. That is not nice. You get hurt. Right, so this is a buy stop order. And obviously when the price goes up, you're going to make profit. And then you must manage it further. That's part of the risk, the risk management, the money management. Right, what's the next one? A sell stop order. Now this is exactly the opposite. So we place this below the market price. We're expecting the market to go lower. In this case, it's a low of a downtrend. Lower tops, lower bottoms, lower tops, lower bottoms. And the market goes lower, starts pulling back. It's part of the structure of the market. We understand that. It starts moving. And again, the method that I'm explaining here says, okay, when it moves past that price, it might go lower, then I want to enter. But I don't want to enter now. I want to enter only when it goes there. You use a sell stop order. When the market touches that, it becomes a sell order, a short order, either market or immediate, depending on your account. And if it continues down, then you make a profit, right? Then you have to manage it. You have to know before the time. Where you're going to put your stop loss, where you're going to put where you're going to manage where you're going to take your profit, and so on. So that's part of the method, right? So very important. It only becomes a sell market order or immediate order when it touches that line, right? And then you start making some profit. It turns around and you've got your stop loss, obviously, then it would be triggered if if it reaches that point. Okay, so we've got the stop order. Does everybody understand what I've said? Does it make sense for you? What is a buy limit or a buy order and a sell order? I think I don't want to confuse you guys. I think I'm gonna illustrate now what I mean with what potential with what potential strategies we can use this, right? So I'm going to first, because what usually happens is I get, if you give a lot of information, the guys get confused. So we've only done the first, the immediate ones is easy. We've done the stop orders now, so let's check how they work. All right. First, I want to show you a method that would use immediate or a market order. Right. What I've got here is I've got a line chart that I took away all the indicators and stuff because I want to see the market rhythm. Please remember, guys, the price is the most important indicator. The price has no lag. It shows you exactly what's going on, what the guys are doing. People are buying and selling. This is what is causing these up and down waves, the ebb and the flow of the market. This is the Euro USD, the 4-hour, bit of a higher time frame. Not so many opportunities, once, twice, or three times a week. So you have to be patient, but the structure is nice. The structure is nice. When you go to the lower time frames, there's more opportunities, but there's more noise as well. So the structure is not so nice. So when I practice, I like to tell the guys, start practicing on the higher time frame to get your eye in. So to start seeing this up and down structure. So there was a downtrend, a couple of lower tops and lower bottoms. There was an uptrend. So let's say we had a method that said we wait for a pullback, and when it pulls back and starts continuing up, then when it continues, then we want to enter. So that's just an example of a possible method. So what we have here is we have a break, we have an early stage of a next trend. That's part of the definition of technical analysis. That's what we're looking for. Early stage of a next trend. Then we take a risk and then we manage that risk. So the market broke through, came up, and it started going up. Now let's say our method said that if it shows going up, then we want to enter, right? So at that point, then you would just click and say it's an instant execution and I want to buy. So in that case, what you would do is you would wait. The easiest way would be to wait until the candle closes, and then you simply open, no, not there, you order, open, and you either buy or sell. In this case, it would have been a buy, right? And your order is open, and you can then put the stop loss and stuff according to what your method says. All right, so that would be the way to use that one. For instance, in this way, if our method said here, right, we need to enter, we would just go, we sell, and immediately there's a sell order open. What I did not do now is I did not look at the lot sizes and all those things. That's part of risk management. If you use too high lot sizes, it means you're risking too much of your account, but that's not the purpose of today. It's just about discussing how to use the orders, right? Okay, so they've got the immediate one. That's quite easy. So normally guys who use that, the immediate orders, they wait for a candle to close and then take a decision there according to the method that they have. Right, the next one, let's say we have a method. Let's go back there. We've got our structure in the market. Let's say our method says that we wait for, that's like the failure swing. We wait for a break, yes, or we wait for the higher tops and higher bottoms. Let's just put this on. We wait for higher tops and higher bottoms to cease, and then it starts making lower tops and lower bottoms. Then we want to enter when at some stage where you know where it continues and starts making, for instance, a lower what do you call it, a lower bottom there. So that is not such a good one. Let's use this one, right? What we have here is we have lower tops, lower bottoms. Something happened here in the market. We don't care, but we can see price shows us here. It made a higher top there. It made a higher bottom. Right now, what our method says is that when the one for illustration is that now it's currently there. The price is currently there. So if this turns around and starts going up, then we want to enter only when it breaks up there. Then we are sure or there's a, not sure, but there's a possibility that it will start making a higher, it will make a higher top there. And that is the beginning, obviously, of an uptrend. Higher top, higher bottom, higher top. It's a possibility. We are never sure. We just listen to the market. This is what the market structure tells us here. It's a possibility. We are willing to take a calculated risk. Now at that stage, we cannot there put immediate order. We don't want to enter immediately, right? So what we do there is we have got the price there. That's where we want to enter. There's the price. What we would do is we go to pending orders. We go to put a buy stop. We want to enter buy, but not yet, only when it reaches that. It's a buy stop order. And then we specify where we want it. Right, that would be 1.10385. Right, and what you see there is very handy. Based on our method, depends on if you're using an indicator or the market waves. I like using the market waves normally, is to put roundabout here somewhere. You put your stop loss, and we use a high probability risk management, money management, where you take partial profits when the market has gone a little bit in your favor. That's a high probability. There's always a high probability that the market will at least go a little bit in your favor. Right. So what happens here is we would enter the stop here, and there I would put my stop loss. And I get it there, 1.10146. Enter that there, and then I decide, depending on my method, where would I take my first profit and so on. Right. The reason why I can't enter this one now is the market is actually currently below this price. So what I'm going to do quickly to show you how to enter is that we're going to assume the market has done this. Market has gone down, it's gone up again, and now it is busy going down. Right, just to illustrate for you how we place the order. So in this case, we want a sell stop. We want that to become a sell order, immediate or market sell order when the price gets there. So what do we do now? This is a live one, so I'm going to enter, and then we can see how it executes. Right, so it's a pending order. It's a sell stop this time. What is the entry price? There's the entry price, 1.10015. It won't execute if you place it above. So then it recognizes it's a sell stop and it's passed, and it'll just give you an error. So it must be below, like we said, below the current price. Okay, in this case, let's say we want our stop loss. We want to put it there. That's 1.10475. 1.10475. Then the structure of the market is not down anymore. Then we want to get out. And let's say we want to take our first profit. Partial profit works actually a little bit different. That's also not part of what we're going to do now. This is just a single one. So let's say we want to take our profit a little down there. 1.09523. 1.09523. Right, and when we click place the order, there's our order as we specified, there's our stop loss, and there's our take profit. So this is on the server, guys, very important. So when your computer goes off or the power goes off or you're not there, this is going to be executed. So if it goes past there, touches it, goes back, and then you're going to protect your account there, even if you're not open or if you're not watching. And if it goes down and it triggers your take profit, you're going to have some profit in your pocket, right? There you protect your account, there the market has been generous, gives you profit. So this is very important. Sometimes you get EAs and stuff that run on your computer, and when you switch your computer off, then they're not watching anymore, and then you've got to make sure that when you've got open trades, that there's at least some form of a stop loss and a take profit, or at least a take with a stop loss, so to protect your account if things doesn't go the way that while you're not watching. So, but anyway, right. So I hope this makes sense. So I've demonstrated the immediate order now. We use the candle, and that's quite easy. Just open the order and execute. Right. And the other one is you want it to go past. The price must go there first. So you want it to pull back, and then you want it to get to that point before it becomes a market order. All right. So let's go back and look at the definitions of the other orders. Let's take this order out. Cancel this one. All right. I speak to a lot of beginners that that don't know the MetaTrader, please guys, we've got at the recorded webinars, we've got introductions. I think there's about 5 different ones, different angles. The professor's got one there, I've got 1 or 2 there, and some of the other trainers as well. Please, please, please go and watch it. Introduction to MetaTrader. Get to know your tool. If you don't know your tool yet, then now you're gonna be confident to do what you want to do, to know what charts to do. You've got to experiment a little bit. That's why demo account is also so important in the beginning. You don't want to do things you don't understand and then you pay the price, or you pay school fees. This is like a simulation, a demo account, so you can get to know this thing, so you can practice and sharpen your skill. Right, let's get back to our presentation. Right, next presentation, buy limit order. Okay, this is placed below the market price. In the beginning, that didn't make sense to me. I remember when I started, so let's explain. Right, the market moves in waves. It's a buy order, remember? But where do we want to place it? How do we use this? The market is going up. It's an uptrend, nice uptrend there. Market continues up and then it starts turning, right? Now we know the wave structure, and it might or it sometimes most of the time, or what you can, the structure of the market is such that it goes up and down. So what you want to do then is you want to somewhere here, when the market is retraced a little bit, you want to enter, right, in anticipation that it's going to go up again. Right, I look at the answers and questions. I see there's a couple of answers and questions. I look at that now. Right, so you've got your buy order. You want to enter a buy order, but only when the market gets there. So the market is currently above the price, and you want it, if it retraces there, there's a probability that the uptrend will continue, and that way you can manage your risk. If you, for instance, put your stop loss there, you can manage your risk a little bit tight, but we don't know what's going to happen. So it's just a scenario, right? So, but we know the market has structure, so this is a calculated risk you're going to take. So it's a buy limit order. You put it there below the price. So it's taken, put it below the price, and what happens is that order lies there and it's not open yet until the market starts moving down. Now what happens if the price goes down and then moves up? You've got no order, right? So you've missed that one. And then usually you have to wait for another one. But if it does continue down, and the moment it strikes, hits that line, hits that order, then it becomes a buy, immediate order, or a market order. Then you're in the market, right? And then what you're expecting, obviously, is for the market to continue up. Then, if it does happen, then you make profit. But if it continues down, then you have to protect your account somewhere here. So it's only when it touches that that it becomes a buy order. And obviously, it's exactly the same with a sell limit order. We place it above the price this time. So there's a downtrend. We see a pullback. We're expecting it. It might pull back, and if it pulls back to there, then it might continue. So we want a sell order there. It's above the market price. Hope this makes sense for you visual guys, visual learners. All right, and I'll demonstrate that now. We've got our sell limit order to be placed there. Nothing happened. You've got no open order, guys. Only when it touches there. Again, when it doesn't touch and it continues down, then you've missed it. Then you wait for another opportunity. So when it does touch it, it's going to be 2 things happening. Either you're going to make some profit that you have to manage, or it's going to go back and you have to protect your account. Only 2 outcomes. Trading is simple, eh? Right. Now let's go and see how that's implemented. What we have here is, let's get my clean charts. We've got, again, remember, the market has a structure. We don't just jump in and out. The closer you get to the beginning, the early stage of a beginning trade, the more potential profit you have. If you wait too long and you get in, then since the market moves in waves, in the wave structure, if you constantly get in too late, then you're taking a risk, but you haven't got a lot of profit potential, and that is not good over a series of trades, right? So what we're going to do here is look at a possible scenario here. Let's say, for instance, there where the price broke through, your strategy says when the market pulls back there, I want to enter a stop. I want to enter with a sell because I'm expecting it then to continue down. Right, in that case, if you put it there, nothing would have happened and the market would have continued without you. Right, sometimes it happens, sometimes it engages you. That's why we try to make a net profit over a series of trades. We don't know what the market's going to do. We just listen to it, right? And we take calculated risks. Once we understand the structure of the market, there's rhythm in line with that rhythm. Let's say you took a decision to put your sell limit order there. Now that while the market was going up there, you were anticipating a potential pullback, and as it was going up there, you decided, right, this is opportunity. You open a new order. You don't want to use the instant execution one. You want the pending one. Now you don't want the stop one, right? The stop one would have been underneath the price. So what you want now is you want a sell only when it pulls back and it touches there, right? So what I've done there, oh man, sorry guys. What I've done there is that's a place. Remember, the price is still going up there. We've got the price there. We enter the price. That's where we want it to become a sell order. And again, you can specify your take profit and so on. So take profit, sensible take profit would have been there or there perhaps, depending on your method, right? And the one you've tested. So there you put your stop loss and your take profit as your method specifies, right? And when you click place order, then it will again place it. I'm going to place one. Obviously, it's not going to be engaged now. I'm going to place one at a stage so we can see properly, so I can enter it. There I won't be able to enter it because the price has already moved on. So let's say, for instance, you are anticipating with your method that if the market pulls back here, then you are willing to take a calculated risk. So how are we going to enter this whole trade? What we do, the new order, volume we're not going to discuss now. We want, as part of lot sizing, risk management, a pending order. So we want a sell pending order again. Obviously, if it was the other way up and you were here and you were waiting for a pullback there, then it would have been a buy order. But this is a sell limit, a buy limit there. This is a sell limit, right? So for this one that I'm showing you, so where's our entry with the sell limit? That's our entry, 1.10357. Where would be a logical place to put our stop loss if it pulls past there? Perhaps a little bit close for us, so we put it a little bit up. So 1.10566. If it goes past that, we don't want to be in the market. Then the structure has been broken, right? And our take profit, let's say we choose one here just before this possible resistance, 1.09932. 1.09932. Right. So I've entered all the you can also put a comment here if you put in a lot of trades to give you some guidance of what this trade was about. When I split place, then the order is opened, and what you can see here is the price continues down. Nothing's going to happen even if it goes past there. The order is not engaged yet, but if it does pull back now and it goes and touches there, it becomes a sell order, and then of course we're anticipating that the downtrend might continue, or the downtrend might continue, we make a profit, or it doesn't continue, go up, and we protect our account here. Right. So guys, we've got some time left. See what question and answers we've got. So this is in a general sense what the orders is for, what they are, and how they're executed. And I've shown you a method that uses a candle that closes. So, and I've shown you another one where we execute, where we wait for the price to pull back, and when it continues, we enter with a sell stop or a buy stop if it's the other way. And now I've shown you one where if there's a pullback. So that's a limit, the two limit orders. We're waiting for a pullback, so it's above the price if you sell and below the price if you buy. Right. Hope it makes sense. Let's look at what the questions and answers is. Okay, Tian asks, what class is about modifying MetaTrader like yours? Tian, mine, I just took away all the indicators and I took a line chart and so on and played around a little bit with the template. If you're not sure about how to do that, you can contact me. You're giving me actually a very good idea, because all the introductions with MetaTrader is basically on what the elements is, not specifically how to do a lot of basics things. So I think you've given me a good idea. I'm going to make another a basic series, part of the basic series, where I'm going to explain and show you, okay, this is what it is, this is what it does, and just the basic things that somebody doesn't know can actually can do a few things, can start seeing the structure of the market. For instance, this is a if I go to the clean charts, this is a very handy thing. Let me just close that order. It's not a good thing to forget orders open. Anyway, so this is a very handy thing for me, just to be able to see the line chart and to be able to identify the structure of the market, the uptrends, the downtrends. It's a very valuable exercise in the beginning when you're starting. And just the small things, even just like taking off the scroll. If you don't know this, then it's very frustrating because the chart jumps all the time. While if it's off, then you are able to scroll back and forth and it doesn't jump up and down. So I think I'll do that and explain how how the basic things work. Okay. But I'm not going to be able to do it everything now. So I know we've got a couple of intro ones, and on the web, if you surf, you'll get another basic one as well. But since I know the things I want the guys I train, especially from scratch, I'd rather do a webinar to explain that to them, to show them exactly step by step how to do that. And then I can always refer back to that. I like the recorded webinar, so you can refer people to it, and it saves time. They can watch it in their own time. Right, let's look for another question. Akanbi asks, how can I begin my trade? Right. That question means you don't know where or when. That's where the method and the risk management comes in. That's when you have to look at that first. How can I open my trade specifically? When you know, let's say for instance, you have a method that waits for a pullback like this. You wait for a decent pullback. This is not so nice. Let's go to another one. Let's use this one. You've got a method where you wait for a nice breakthrough of the trend, a pullback, and then you enter. Then your method would specify, for instance, enter there, put your stop loss there, or whatever method you're using. How you would then enter then is exactly how I explained. Is you would use this new order, and then depending on the method, you have to use the immediate or the pending orders, right? But since you asked that question, it means, or I suggest anyway, look at least at the foundation of online trading, so that you can see our method step by step explains how we do and what we do. Right? There's always 3 steps for me anyway. You must see the structure of the market with any method. You must see the structure of the market. Is it an uptrend? Is it a downtrend? And then is it the possible beginning stages of a next trend? And the most simple one I know is we simply use the structure, the wave structure of the market, and when it goes down, starts making lower tops, lower bottoms at one of those in the early stage of the next trend. When it's putting up and going down, then you can put a stop order there. So that's one of the ways we use a stop order for. Right, it's just one method. But if you, for instance, use the method that uses the pullbacks, if you choose a method like that, then it's going to be different, a little bit different. Still the same structure. We use the structure of the market, but you're going to use different order, right? So you need to do some more research, ask some more questions, and figure out the structure of the market at early stage of the next trend, and listen to to a couple of simple, well-defined methods. I've got two. If you go to that I can refer you to, let's quickly go onto the recorded webinars. Let me show you. If you log onto your account, this is one of our very valuable resources as well. And you go to recorded webinars. How you find that is when you log on, you go to education, webinars, education in your lower left hand side. Click on webinars, shows you the upcoming ones, and then it shows you the past ones, recorded ones. Right, now there's two I'd like to suggest to you, Akambi, simple methods that's going to put all this in perspective for you. It's going to answer your question about how can I begin? Where do I put my trade? I don't know when and where to put it. Right, the first one that I suggest is the one of our professor. It's rather at the lower side. There it is, about 3/4 down. You get the ultimate trading strategy. That's where it explains to you how the structure works and a simple method of where to enter, where to put your stop loss, and so forth. And coupled with this one, connected to this one, if you just scroll up a little bit, let me just repeat that. It's the ultimate trading formula. So you get it there. You can watch it at your own time. Let me show you how. You just click on it and then it starts playing. Well, it opens and when you click, it starts playing. Right, but that's only way to enter. This is a way to enter and to put your stop loss, and this one is connected to that one, a Fibonacci strategy explained. That's how to manage your profits. Right, where do I take profit? How do I use, what does a high probability profit management of risk management means? I take some of my profit off, makes my risk less, make my risk less, and make my mental stress, that's the most important part for me, make it less as well. Okay, so that's a very simple one. That's called a failure swing. And then I've got a couple here as well, which is a little bit later. Moving average, this is part 2. So let's look for part 1. There's part 1, that's applied. I think I've got a part 1. Yeah, that's that one. So the moving average spring strategy is also a very simple strategy that you can use to start practicing on the old chart, start seeing that rhythm, knowing when to enter. Right. I think I answered your question quite extensively. I hope so. Right, I've got another question. Thanks for playing the session. I was getting trouble on the demo practice, right? Guys, demo practice, I know a lot of guys that get stuck on demo practice or on demo. If you get stuck on demo, then you have to contact us. The purpose of demo, actually before demo, is to get this foundation, to get the basics, to figure out the basics, to build that puzzle for yourself. What is the basics, the structure of the market, early stage of the next trend, how do I take the risk? And then you practice it on a demo. Demo is not for playing around. A demo is to practice that you've learned, the basics. How do I apply it? How does it look? You start to practice, and then as you get better, as it starts working, then you start actually taking trades there, practicing how to put the orders in. And your purpose in the demo is not to stay there forever, just to practice until you can make a net profit over a series of trades there. That means you understand the basics, it's in place, and it's starting to work for you. Right, as soon as you get there, then we move on to the cents account. Remember the gym, we add a little bit more pressure, but very, very slowly. Cents account, if you open $10 account with $10, then it's 100 or 1,000 cents, and it's realistic. You can take realistic risks, but it's cents, so it's not a lot of mental pressure. That's very, very important. Don't make the mistake of putting on too many weights too quick. So there's no shortcuts there. Right. So where was I now? Okay. Right. Yeah. So I just wanted to say, don't get stuck on a demo. This is a business. We move through a demo for a purpose. We use it for a purpose, and we move on to live account and slowly build from there. Anyway, anytime you get stuck, you're not sure, you go back, go check is your basics figured out and stuff. So yes, that's it. Right. Gabriel said, can I trade without setting stop loss? Well, Gabriel, you can, but the problem is if there's a whipsaw in the market, um, and you and it goes too far against you, that means it's going to lose your own account. I can very quickly tell you a story about a trader that phoned me. It's actually referred to by account manager. And what happened is the account manager just said, Theunis, please talk to this guy. He's very distraught. So I talked to him. He's actually in Canada. And he said, I don't know what to do. I don't know what to do. I tell him, okay, give me some background. What's happening? He said he started, let's say with $1,000, started 6 months ago, and he got the basics right, and he's busy, and he built his account up to let's say 7,000 rand over a cup time, and then and what happened is he thought, no man, he doesn't need stop losses anymore. He knows this thing about how to manage his risk and everything now. And then the specific did was oil price. The oil price was coming down, and he said, no, I know the price is going to go up. Mistake. We don't know. We have to listen to the market. So, but he said no, and then he started buying, averaging down. So he's buying as the market goes down. And at the stage when he bought me, or he contacted me, he had open losses of 5,000 US dollars. So of his original six that he's built up over time, there was only 1,000 left, which he began with. And he was obviously very distraught. He didn't know what to do. So his first mistake was not when the structure of the market changed to get out. Take a limited, calculated risk. That was his first problem. But I coached him through the basics, managing your risk, and when he realized that, he started closing his positions because he wanted to save the last bit he had left so he can start again. But it's not a nice lesson to learn. So without stop losses, ish. Okay, Dian says, okay, thanks a lot. Yes, Dian, all the videos I'm talking about is free. Please, guys, we want our clients to learn the basics, to start making a net profit over a series of trades. We give it to you free. Take it, take hold of it, study. We want to retain you as a client. So many of the brokers, they don't provide any training, and clients come in, they don't know what to expect. The expectations are not realistic, and then they just blow their accounts and leave. So this is why I train with these guys. They take training seriously. You don't become a successful trader just by accident. You train. So, and we provide that training for you for free because it's good business for us. We want to retain our clients. Right. Okay, next one. Thank you. William said he's watching from Uganda. That's good. Yeah. Just take it step by step, William. So get the basics right. Can look at that foundation one. Let's see very quickly. I saw the foundation. I'm just gonna find it here. Foundation. There you'll see it is. The foundation of online trading. So there is going to be some background, filling in some background on the things I've been telling you. I just want to go back while I'm answering the questions. I want to go back to the screen so I can show you my oh man, my email address is not there. Okay, I'm gonna type it in quick for you. This is the old one. All right. Sorry guys, I'm wasting time unnecessarily here. Just want to get this email address up here so that you can email me if you have questions or want to see this recording of this. Right, there it is. Okay, so I believe you guys can see it now. It's Theunis Kruger at FXTM.com. Right, let's continue. We've got a couple of more minutes left. Okay, yes, Tian said he's willing to watch. He's going to watch the ultimate trading strategy. That's a good thing. That's a good thing. Simple, well-defined, proper money management, and then practice. That's the secret to mastering any skill, by the way. Right? Let's see. Fibonacci strategy. Yeah, that's good. Tian says he sees us at the next video. That's good. David is from Nigeria. Welcome, David. Hope you found it useful. He said he got some answers. Gabriel, thanks for the answer. I will adhere to the style of pending orders. Right. Okay. David said, what is the best to trade? When is the best to trade? Right. I'm going to close with that. I get a lot of questions about what time frame is the best. Actually, on every time frame, Moses or David, sorry, David, on any time frame there's a structure, right? On the higher time frames, there's more people involved in creating those candles, or it tracks, for instance, the 4 hours or the daily. So it's all the price action in a day. So there's a lot of people involved. So that price structure is a little bit more. I'm going to show you here. Is a little bit um, more stable. So you see these beautiful up and down trends. Sometimes there's a ranging market. But if you drop down to the lower time frames, right? Okay. So it's just the structure is better on the higher time frames. That's the advantage. But the disadvantage is there's not a lot of opportunities. So the daily, you might get 1 or 2 opportunities a month. The 4 hours, 1 or 2, perhaps a week on a currency pair, perhaps, right? If you go to the lower time frames, so let's go to the 15 minutes, you'd immediately see the structure is a little bit, there's more noise, right? Especially if you put on the candles, there's more spikiness. Depends on which session you trade. There you can see there's some news come out or something, huge spikes. That's because these candles represents 15 minutes. There's not a lot of people involved. So if big players enter at this time frame, then it shakes the markets a little bit. But there is a structure. You'll see there is a structure. There is uptrends, there is downtrends. It takes a little bit more practice to master these ones. You get more stop outs and stuff. So, but the advantage is that there is more opportunities, right? So if you master the basics and you practice hard enough, you spend enough time practicing on whatever time frame you want to, then it is possible to make a net profit over a series of trades, and that's the purpose of what we can do. Right. Okay, one last. I see we've on the edge, but we've got a minute or 2 left. Moses asks how to avoid invalid stop loss or take profit error. Right. Normally, Moses, that happens. I'm going to show you quickly. Let's just get my clean chart here again. Let's go to the end of the chart here. That's right. You go to the end by the scrolling bit. If you want to go to the historical charts, if you want to practice, then you have to switch those ones off. Then you can go back and test. But if you want to be at the right side, then you enter that. Right. Most of the invalid stop loss and take profit errors comes because of the spread. Now, not everybody has the spread shown here like I do. I'm going to show you how to activate it if it's not. When you go, you click on your charts. You can right click, go to the properties, or you can press F8. And you go to the common tab. I've clicked the ask line. If it's not clicked like that, then you only see that. Now, if I'm going to try and put in an order in between, let's say I want to put in a stop order or something in between there, it gives me some errors. I don't know what's going on. But the moment I put on the ask line, the ask and the bid, that's where the spread comes in. That is part of the commission. The moment you see that, then you know if you can try and put a pending order somewhere there, then it's not going to work. Or if you're busy executing a stop loss, you want to put the stop loss very close there. It's not going to allow you to put it inside the spread. Now with the higher time frames, it's not such an issue, because as you can see here, you can almost see, can't see the space there. I'm talking about the width on the chart of the spread. But if you go to the lower time frames, then it becomes significant. Right, you can see it's quite big, and if you go to the 1 minute, then it's even larger. So compared to the price structure, you can see how wide this is. So if you entered here, let's enter here quick, just to show you what I mean. We enter here with a sell immediately. There's a requote. You see what happened here? That's just the explanation, guys, of what I said. So there was a requote because I wanted the immediate. This is an instant execution immediately, and it said it can't give it to me there. There was just too much movement there. So you saw it in action there. So now I try again. Now it's taken, right? Now if I try to put my stop loss inside that spread, it's going to give me an error. Now I don't get a confirmation there, an error, because I've got one click in one click enabled. So I'm just going to deactivate my one click so that I can show you guys. Go to trade, deactivate the one click, then it asks for confirmation. So if I try to put this thing there now, it says it doesn't allow me to do so. Right. So if I put the order there, you can see that's grayed out. And if I try to press, if I've put it there, then it gives me an error. It doesn't want to do it. It's because it's inside the spread. The moment I go outside the spread, it will take it. And I can enter. And there it is. But if I try to put the stop loss there inside the spread, then it doesn't work. And the same thing with the take profit. So if I was now in a profit here and I wanted to take profit, it gives you an error if it's inside the spread, right? So that's one of the ways you can get those errors. So I hope I answered some of your questions. Right, that time's up, guys. See. Okay, there's one more question. I like the questions. Victor asked the question. What is the minimum pips away from price, both the bid and the ask, that you can place the pending order? Just outside the range. And that's going to depend on which currency pair you choose. If you go to the, let me just close this one. It's a bad habit to leave open orders. Close that one. If you have one click enabled, then it doesn't ask you for confirmation, it just executes. So in practice mode, when you're practicing, it's good to have the confirmations, but once you get proficient, you don't need it. When you go to Victor, when you go to the market watch, you see all the different currency pairs that listed. In the beginning, you won't see everything. You have to right click and say show all, shows you everything. And there you've got different options as well. Initially, the spread is not activated, but you can just activate it there. Normally it would look like that. You just activate spread and you can actually see the spreads there. So the bigger the spread, the more it's going to interfere with your orders, right? So if you're trading lower time frames, it's worth trading the currency pairs with the absolute lowest spread. The Euro USD there on the standard account is below 2. That's low. So as you can see, some of them up to 40, that won't work. It's going to be more difficult on a lower time frame to make a net profit over a series of trades, because the big spread is going to, like this, it's going to interfere. It's so wide, it interferes with the structure. So if you, yeah, right. So and there you can see. So choose, if you trade the 5 minutes and 15 minutes, choose currency pairs with a very low spread. As well, I'm gonna switch to another account here to just show you guys. I think that's the last thing I do. Also, I'm gonna be over time here. An ECN account, that's the purpose of an ECN account. It's specifically designed for people that trade lower time frames. You pay a small commission and then much lower spread. So this is the same one, just on an ECN account. You can see the width compared to the previous one is much smaller, guys. So if you're trading on the lower time frames and you ECN, you pay a small commission, but your spread is so much lower, so it's easier to make a net profit over a series of trades because the spread's not gonna interfere with the structure here. So just some last advice there. Okay, thanks for attending, and I hope I've helped you to get a few puzzle pieces and to see where you are in the process of learning to become a trader. Don't be impatient. Be patient and diligent. Just like any skill, that's how we master. That's how you master any skill, and it's going to be the same here. So goodbye and good luck, guys. Please email me if you get stuck, and then we can sort you out. Okay, goodbye.